Hey guys, welcome back to my channel, Forex Flossing, where you can find quick, simple explanations for Forex concepts. Today is going to be a really quick video about anchor points and applying fibs. So I'm going to get right into it using two examples. The first one, EUR-GBP. So this is considered an anchor point. This is the highest point within the trading week. If I take this and measure this, it is a cup from Monday's high. So it's not exactly the highest point, but we are considering it an anchor point because it has matched this this previous day high. So for all intents and purposes, this is our anchor point, right? This is just noise. This is just the market making noise. And this is our highest point of our trading week. So what we do when we find the highest point of our trading week, we need to determine the trend of our pair. And let me take some of these indicators off just to make things look a little more clear. Okay. So EUR-GBP is one of those pairs that just continues to consolidate. It goes up, it goes down, it goes up, it goes down. And right now, with this strong wick on the weekly, we can assume that we are headed in a downward trend. We're still consolidating on the daily, but we kind of hit a peak. And it's safe to form a bias of down. It's a little more clear on the 4-hour that we are heading down, right? Okay, so again, back to peak formation highs, or the anchor points. Within our previous week, we have determined that Thursday, that this is our anchor point. This is our highest point that price action reached before an impulsive move down. And so since we are in a downtrend and we want to measure this retracement move back up close to our peak formation high, our anchor point, we take our Fibonacci tool, we go from swing high to swing low, right? And we measure this next peak, which is a 78.6 retracement from this anchor point. One thing I want to teach you though is when we are in a downward trend and we go from swing high to swing low, to measure our retracement within this on the 1-hour time frame. Within this, we want to look for price to see if where price action hit the 50% retracement mark. And what we're looking for is we're looking for a nice pullback there. Price pullback, it didn't continue to extend, but it did make a significant pullback before it continued up to this 786 retracement. And it appears as though it's heading back down. What I want you to know is this is a Fibonacci sequence. And this is a very standard pattern that price action tends to do when a pair is consolidating. So if we have this anchor point and we see that price action has not been able to exceed it, we always want to take our Fibonacci, go from swing high to swing low, and look for price to come to the 50%, possibly come back down. Sometimes it'll come back down and attempt to take out the lower low and fail. This time it was just a significant pullback, and then we see it come back to the 7-8. So we always, whenever we see a peak formation, we see a significant movement around the 50 retracement, and then a peak, another move upward or continuation to a 78 retracement, we know that this is a golden setup. This is a setup for a potential 100 to 150 pip move to the downside, because now that we have price action retracing at the 7-8, and we see that there has been a significant move, a significant touch and retracement at the 50. It is safe to assume that once we've reached this peak or this retracement of the 7-8, that price action will continue down to at least the 2-7. So that is a very popular setup that I look for when I'm looking to get into price action and get at least 150 pips out of the market. I haven't gotten in this yet because I'm waiting for this to slightly cup or retrace a little bit, and then from there, since this is the beginning of Tuesday, from there I expect it to fall. Another great example is GA at the moment. GA, this is GA on the 4 hour. Again, let's go down to the 1 hour. This is last Friday was our peak formation high, right? This is our anchor point. So this is the highest point, the last highest point within our previous trading week. And we take our Fibonacci. We go from swing high to swing low just to measure the retracement move up, right? This retraced, no. I'm sorry. This is the retracement here. This retraced to the 6-1. It wicked all the way to the 6-1. And it came down to the 2-7. This is a variation of the theme that of a peak formation, or not peak formation, but anchor point theme that I just previously discussed with EG. But this time price action came down. It wicked past the 50 to the 61 and extended to the 2-7. So now we're looking, so the peak formation low, or the anchor low, is around here. I don't assume that price, I assume that price will not make it down there. One, because I drew a trend line and price seems to be respecting the trend line. So I know price is heading back up. And if I did my top-down analysis, I know that GA is in an uptrend. Okay, I just wanted to establish that. So again, this is a variation on the thing, but this is our anchor point. Price came up, wicked to the 61, came down to the 27, respected our trend line, right? So from there, I know price is going to at least head up to try to take our peak formation high. And I know that this is going to be 150 pip, at least 150 pip plus move. Why? Because we have already had some sort of 50% retracement of this move down. This is the actual move. This is just an extension of this 50% retraced move. So it's kind of a variation from what we saw on EG, EURGBP. Price action, once it reached the 50, it didn't necessarily go down, but there was a significant pullback. But with GA, there was, once it retraced to the 50%, there was a pullback down and an extension to the -27. So again, that's a variation of the theme. The point is, once price action makes an impulsive move down and you see some type of 50% retracement, as in here, you can expect either an extension from that point or a continuation at least to the 7-1 or 7-8. Once you see that and price respects that 7-8 setup, you know that you are at least guaranteed a 150 pip move. So we're just, this whole video is to show you how to identify your anchor points, how you use Fibonacci to measure how far a retracement has extended, and where you are with regards to your setup so that you can potentially take at least 150 pips out of the market. That is it for this video. Hopefully this made sense. If it was helpful, please leave a comment. Please like, share, subscribe, and I will see you guys on the next video. Bye-bye.